Welcome, dear traders. You are watching a recap of the Asian session. Asian stock indexes kicked off the new week with a mixed dynamic. Japanese equities posted losses due to the tech sector and a profit taking. Australian and the New Zealand stocks climbed. In New Zealand, the main stock indexes have been rising for the third day, and in Australia, they reached a 4-week high. Last week, several Fed policymakers made rather hawkish comments. Fed Governor Christopher Waller and Richmond Fed President Thomas Parkin spoke in favor of a rate increase. This week, there will be more speeches from Fed members. However, traders are largely anticipating Jerome Powell's speech before the Senate Banking Committee on Wednesday. Despite skipping the rate increase in June, the regulator intends to tighten monetary policy further. Inflation remains high and shows no signs of easing. Investors expect the Fed to raise the benchmark rate again by 25 basis points in July. After that, it's likely to take a pause. According to the FEDWATCH tool, about 72% of traders are betting on such a scenario. Powell needs to make really hawkish remarks to convince traders about the new rate hikes. The optimistic comments of another American official should be taken with a pinch of salt. The visit of U.S. Secretary of State Antony Blinken to Beijing yesterday demonstrated at least some willingness to cooperate. However, the question is whether prolonged negotiations with China will bring positive shifts. If there is no result and only words, market optimism will eventually fade away. Although optimism that was fueled yesterday has not eased yet, negotiations between the United States and China made investors in the Asia-Pacific region wary. The weakness of the Asia-Pacific currencies against the US dollar also adversely affected market sentiment. Today, US stock exchanges are closed, and this is why Asian trading was relatively calm. Traders were trying to assess the monetary policy prospects after the rate decisions of several central banks last week, so the greenback was relatively stable on Monday. At the start of the week, the US dollar index rose to 104 points. Fed policymakers maintained the hawkish rhetoric amid persistently high inflation. A steady economic expansion increases the likelihood of a soft landing. A drop in inflation without a recession is assured to boost the greenback as a safe haven asset. Although the US dollar was drifting near the monthly low of 102 points, and it was still trading in the upward range of 102.20 and 102.40. The yen was more volatile after the Bank of Japan kept its monetary policy setting unchanged last week. Nobody expected the regulator to raise the key rate, but there were hopes about the changes to control yield policy. As a result, the yen weakened even more. The dollar-yen pair tested a 7-month low of 141.90. US government bonds also increased somewhat and pushed the pair up. The yen is very sensitive to the movements of Treasury notes. The yen tried to benefit from the weakness of the US dollar. After the highest weekly close since November last year, it was moving in the range of 141.40 and 141.90. As seen, it rose slightly versus the greenback. However, bears will hardly have enough strength to take control. The pivot level is now located at 140 when it comes to downward movement. The 142 level serves as a support before the November 2022 high of 142.20. The Australian dollar was also trying to recover to Friday's levels. It seems that investors expect the Fed to raise the rate only once this year. and these expectations stimulate risk appetite. Given the risk on sentiment in consolidation of the greenback, the Aussie managed to approach 0.6870. It was moving in the bullish channel over 0.6834 and 0.6888 in the Asian session. The Aussie is also gaining momentum ahead of the publication of the Reserve Bank of Australia meeting minutes and the People's Bank of China's rate decision. The regulator is expected to cut the rate to support the crippled economy. A surge in China's economic expansion is also beneficial for Australia, so the Aussie may advance amid this driver. Despite the sluggish growth of the US dollar, the upward movement of the commodity currencies seems rather fragile. Therefore, the New Zealand dollar snapped its 4-day winning streak and moved away from the monthly highs again. The Kiwi dollar pair was trading at 0.6228. It was falling in the price corridor of 0.6205 and 0.6240. The pair is now in the bear's close, as the traders are expecting another rate hike by the Fed. At the same time, the Reserve Bank of New Zealand has recently ended its most aggressive tightening cycle since 1999. It was bearish for the Kiwi. However, the Fed could do the same in the near future. It may somewhat limit the downward movement of the Kiwi dollar pair. Trade balance data for May could also impact the trajectory of the New Zealand dollar, and this is just one of the many economic reports scheduled for this week. That's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!